Hey, this is Bob from Trade Genius. The 1st of June, and I guess first day of summer, daughter's last day of school, and so where's the year going? But I'm going to show you a couple of charts here. This is um, pretty amazing to me from the lows of the 17th to the highs of today. The market's gone up nearly 100 ES points, and based on God knows what. And so we're reaching a point now where it's getting pretty extended. And look how far away it is from its moving average and from its VWAP. So this is all fairly low volume, in comparison to the average, and it's just been stuck on stupid. And I think probably what's happening is that they're grinding it into the meeting on the 13th and 14th, and they're going to force the issue. I guess they want Yellen to raise rates, and which is really weird because if you look at the financials, that doesn't look like happy days are here again for the economy. And if you look at oil, that doesn't look like happy days are here for the economy. So what you're really having here is an absolute squeeze of epic proportions, and they the algorithms have figured out how to manipulate the risk parity trade to such an extent because most of the fund managers aren't selling unless they're getting redemptions, and they're not getting redemptions, and so they're just being forced to buy at ever higher prices or just sit on the rocket ship as it goes up. But underneath the main index is things aren't that hot, and so up until yesterday, even the small caps were getting their teeth kicked in, and they just did a major squeeze on the small caps yesterday and today, and it's been a really weak sister. But all it's done is just bring it back to the range it's been in for months. And so once again, we're dealing with major short squeeze here, and I'm just really worried that this thing's gonna is it might already been blowing off. But for perspective, is that the economy, the stock market can't grow faster than the economy over time, and forget 2009. If you're talking about the last 5 years, the average growth in the stock market over the last 5 years has been 15% per year, and the stock market and the economy has been growing at like 2%. And so the whole thing is a growth of price earnings multiple expansion, which means things are just getting more expensive against its intrinsic value, which is the definition of a bubble. And it really being enabled by the central bankers. And I just did some back of the envelope calculations. Is that just between the Bank of Japan and our Federal Reserve, they're sucking out like $150 billion a year in interest or yield payments through treasury purchases or direct purchases of equity. And no wonder they keep doing it. It's like free money. They bring money into existence. They then take that money and they buy things that generate a yield, and then they pocket it. And so that's what's been pushing this thing up so high. I mean, right now, you know, I think there's over $100 billion in reserves at these central banks that are being used in this manner. And so you got really the big players are the U.S., the Swiss, and the Japanese that are really active in our markets. And so they buy the most liquid names, which then turns around and drives the index up. But pretty scary because when this thing ends, it just doesn't slide down. It gaps down, and hence my worry. I just can't see it continuing. 2007 and 2008 this happened too, and I was an absolute wonderment. And same kind of reactions is like, well, you can't beat the Fed. Well, you got to go along for the ride. Well, you got to dance while the music's playing, and then you just got these series of massive dislocations in price, which just wipe people out. And so I just can't play that. Especially this time, it's a little bit different. Not everything's going up. So there's some choices here, sort of things that we struggle with sometimes, in terms of getting burned on a few of these trades. Some trades that just continue to pay because the market's continuing to cooperate. But it's definitely now almost a day trader's market, and these reversals could just come out of the blue, and that's what I'm worried about. And we have a big event coming up on the 13th and 14th. One or two things are going to happen. Either we start selling down into the Fed meeting, or we actually blow off into the Fed meeting. And I don't know which one it's going to be. I just have to kind of throw away my fundamental analysis here. And even on the technical side, we're literally stuck. If you look at SPY, we're literally stuck at no selling. I mean, this is not normal. This is not natural. Nature operates in oscillations. It doesn't operate straight up. Anyway, I got to run. I'll catch you guys this weekend. Have a good one. Bob from Trade Genius. We'll see what the employment brings tomorrow. Thanks. Bye-bye.